Myself Vaibhav. In today's trading session, we are seeing that the Nasdaq is recovering from yesterday's losses, but still, on the day ahead, we have to watch out for the technically important level of 11,500. And if I feel that if the Nasdaq fails to cross and sustain above this important resistance zone, then we are most probably likely to see the Nasdaq entering into the bearish phase and inching towards 11,000 levels. And that's why the title of today's session of Market Movers is Nasdaq looks primed for the correction. If you consider the trading context for the day, the uncertainty which has cropped up in the market after yesterday's tweets by Mr. Trump over the deferral of stimulus talks to beyond the November elections is still hanging heavy, and I think this uncertainty is likely to have great impact. And of course, after that yesterday's tweet, we have seen some clarity emerging, and even Mr. Trump has said that he is open to having talks regarding the airlines bailout package and some other stimulus measures. But let's see how these things shape up as the day progresses. Just in a while, we are also scheduled to get the EIS crude oil inventory data, and the consensus is that we are likely to see the crude oil inventories rising by more than 1 million barrels, and this will be in line with the recent trajectory. Even for the last week, we saw the inventories rising by more than 1.6 million barrels, and this week is likely to build on that trend. Later in the day, we are also scheduled to get the FOMC minutes and the explanation, or you can say some clarity on the average inflation targeting is expected in these minutes. The chairperson of the Federal Reserve has said that the Fed is going to target the average inflation. That means the Federal Reserve will allow the inflation to shoot beyond 2%. But how that is going to play out in the real economy, how the Fed is going to manage in terms of the framework, and that is a key issue here, and that will go a long way in convincing the markets regarding the Fed's plan. That's why these FOMC minutes are important. Now let's see how the technical things are shaping up for the Nasdaq, and then we will also consider the light crude oil. Let's start with the technical outlook of Nasdaq first. This is the daily time frame chart, and here we have seen the Nasdaq rally substantially, and after its peak closer to 12,500, we have seen it correcting almost close to this 10,500 zone. But from those levels, we saw this recovery pushing the Nasdaq even above the 12,500 zone. But last couple of sessions, it has really struggled to hold closer to these levels, and as the last couple of sessions have spanned out, I feel that this is going to prove the near term resistance for the Nasdaq, and more and more time, if we see the Nasdaq is pending below 10,500, the more reasons we will have to go for the short sale trading setups with targeting close to 11,000 zone. If you consider the lower time frame chart, here we have the central pivot point cropping up closer to the 10,000, sorry, 11,500 zone. And as you can see, for last couple of sessions, the Nasdaq has really struggled closer to this resistance zone. And as the price is rebounding in today's session and it is inching again closer to this immediate resistance zone, we can indeed stand ready to go in for fresh short sale trades if we don't really see a fresh break happening beyond this resistance zone. And for that, we have to be vigilant in today's session and see how things shape up. This is the important price area to go for the fresh trading opportunities, as our stop losses will be fairly sharp. I think a stop loss closer to 11,600 should do well, where we are looking for the entry closer to the 11,500, and on the lower side we can target the immediate swing low or even beyond that. And even if we simply want the risk reward ratio to be at least of 1 is to 2, even in that scenario we will be able to target almost closer to 300 points on the lower side, and that gives us the optimum risk reward ratio also. So here, see how things go as the US session is underway, and if we don't really see a fresh break above this immediate swing high, we can indeed think about going in for the fresh short sale position anywhere closer to this 11,500 level. Of course, you can wait out for a couple of hours and see if the price consolidates first, and only after due consolidation you can think about going for the fresh trade while targeting closer to the immediate swing low, which is there around 11,200. And as I said, on the upper side the stop loss can be just little above this immediate swing high. So for that matter, the stop loss just little above 11,600 will do well for our trade setup. Now we will turn our attention to the commodity segment where we will see the light crude oil's technical outlook. The crude oil has also rebounded sharply from levels closer to $37 per barrel, and it has you can see that it has kind of formed the double bottom formation, and that gives us more reasons to believe that this time around we might see the light crude oil finally breaking above this prior consolidation level and moving toward this immediate swing high, which is there around $43 per barrel. If that is going to be the case, then we need to be looking for the fresh trading opportunity to go for the fresh trades in light crude oil. And if we want to go for the long trades, I think we will have to rely on the central pivot point as our immediate marker. Anywhere closer to this price band, we can be fairly confident of going for the fresh long trades. But if we see the break on the lower side, then of course we will have to turn cautious, and better it will be for us to sit on the sidelines. The regression curve has also shaped up to be in a pointing on the upside, and taken together, the regression curve as well as the pivot point series are pointing to the possibility of trend change happening in the light crude oil prices, and that is also one of the reasons why I am betting on the price possibility of price of light crude oil inching on the higher side towards US $43 per barrel. And for that scenario, we have to minimize our stop losses in case we go for the long trades, and we bet on the buy decision. And in such scenario, I think on the lower side we will have to rely on this 100 SMA zone, which is there around $39 per barrel, to act as our decisive marker. As long as the price is closer to this 100 SMA or little below that, we can be confident of possible recovery, and the light crude oil going on to rise beyond this immediate swing high. And if you want to go for the optimum trading opportunities, I think the best way to play this will be to go for the light crude oil trade on the long side if we get any opportunity closer to this 100 SMA. But at the moment, the light crude oil is almost 1.5 to 2 percentage point above that desired entry point. So it will be difficult for us to say if the prices are going to go towards that level or not. But from the risk reward perspective, this is an excellent setup as our stop loss will be anywhere close to 38, whereas our target will be closer to the 41 or even beyond that, providing us the risk reward ratio of 1 is to 2 in case our entry point is closer to US 39. So that's a promising setup here, and we have this 50 SMA crossing above 200 SMA. That means the golden crossover is in place, and also as the price action has continued to hover on the upper side of these 200 SMA, we can expect these 100 SMA also to catch up with the 200 SMA and eventually cross above that if the price action holds well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.